Clearly at the moment we've got the weakness in China's economy, the falls in commodity prices, so reduced incomes in the regions to feed through the economy over the next 18 months. And now, as of last week, we officially have this part of the world moving into an El Nino weather pattern. Hello again, everybody. Over the past 2.5 years with NZHL, I've been doing these weekly videos, the weekly Tony's thoughts, and then the monthly, not entirely accurately named Tea with Tony, having a look at developments in interest rates, what's happening in the economy, and obviously what's happening in the housing market as well, because it's been a fair old roller coaster ride in the past 2.5 years. Now, this will actually be the final video, but my relationship with NZHL is continuing in the form of the NZHL property report. Basically, they are coming on board, NZHL, as sponsors of my monthly survey of real estate agents. And of the 5 monthly surveys which I do, I guess that's the one I'm most proud of. It gives what I think might be the only actual measure of FOMO on the planet. I'm not aware of it anywhere else. And of course, FOOP, the fear of overpaying. So those inversely related variables there, or indicators of the intensity of feeling on the part of buyers. So look, thanks everybody for tuning in over the past 2.5 years. I think I started out with a good level of success, talking about the benefits of fixing in for 5 years at roughly 3% at that time when these things started in March of 2021. Feel happy about talking about the pace of house price inflation slowing through 2021. Like everybody else, did not pick that house prices would fall a tremendous 18% from the end of 21 until about 5 or so months ago. Certainly didn't anticipate the extent of the credit crunch late in 2021. Like everybody else, completely got it wrong with regard to interest rates only rising a limited amount. I can recall back in about late 2021 giving a view that, hey, maybe the 1-year fixed mortgage rate will get itself to just below 6%. Well, here we sit over 7%. And of course, what everybody's learned around the planet, all us economists, every single central banker, is that with so much money being thrown at economies during the global pandemic, inflation has been generated. And while there are hopes at the moment that things are now under control and interest rates maybe are going to be able to start coming down, as we've just seen in the United States over the past 4 to 5 months, their economy is actually stronger than people were expecting, especially the labour market. It's led to some extra upward movement in US interest rates, and are pushing out in time to late next year, the period for when people expect the interest rates in fact to be coming down. And this of course has led to some extra upward pressure on interest rates here in New Zealand, but the environment still remains massively uncertain. It seems like every week there's some new information to take on board. Clearly at the moment we've got the weakness in China's economy, the falls in commodity prices, so reduced incomes in the regions to feed through the economy over the next 18 months. And now, as of last week, we officially have this part of the world moving into an El Nino weather pattern. And not only does that mean really strong westerly winds hitting Wellington, etc., high probability of deep droughts in many parts of the east coast of the North and South Island. So that's the new information many of us are trying to figure out the implications of at the moment. And in theory, it should lead to interest rates coming down maybe sooner than people are thinking in 2024. But again, if we've had surprises in the United States of the labour market being unusually strong, we could easily perhaps see the same in New Zealand, especially now with the migration boom underway, the obvious upward pressure that is placing on rents, which will feed through to house prices. And of course, now we are into month 4 of the upward leg of the house price cycle. House prices have been rising for 3 months, the official data from REINZ, and they probably went up again in September, the month we're in at the moment. These are just early stages of the upward leg of the cycle. It's being driven, the turning around and the increase so far, by first home buyers. Now I'm starting to see the investors slowly moving back into the market. They're encouraged by the fact that there's a feeling interest rates have peaked, that prices are rising, that there is this migration boom out there. And some people are willing to take a punt on a change in government come October 14, and therefore maybe a change in the tax legislation for the investors as well. Everything is still very fluid out there, but you'll still be able to keep up to date on certainly my views on what's happening with interest rates, housing markets, with my weekly publication, Tony's View. You can simply go to tonyalexander.nz and sign up for that. And as I say, keep an eye out for the monthly report from myself and NZHL, the property report, looking at what's happening with the real estate agents who are, right at the coalface, along with mortgage brokers, seeing what is happening out there in the housing market in particular. All the best, everybody.